what I'm going to do is ask the panelists to just go down and, again, introduce yourself, talk a little bit about your firm and what you do within it. Is that fair?
Sure. My name is Maxie Fields. I work at CBRE. I do debt and structured finance there. So actually, I work with all of the people who were just up here. We source debt. We go to lenders like PNC, Wells Fargo, et cetera. And then we are also an agency lender. So pretty much everything they just talked about, we do. And actually work against you. But,
friendly competition in the industry.
Exactly. So yeah.
Okay, so my name is Nicole Brickhouse. I work at HFF here in DC. Similar to what CBRE does, we're a full-service intermediary on the capital market side only. So where CB will have a leasing arm and a property management arm and stuff of that sort, we're only capital markets. So we have an investment sales team and then a debt and equity team in our DC office. I split my time between the multifamily investment sales team and the debt and equity team. I've been at HFF now for 2 years. Before that, I spent my time at a different intermediary. I think I've been in the DC commercial real estate market for 5 or 6 years now. So it's been a really fun time to watch what happens to the city as it's been changing from a commercial real estate side.
I'm Blair Priest. I'm a senior underwriter at Walker & Dunlop, and we structure finance for all property types, mostly multifamily through selling loans to Freddie Mac and Fannie Mae, what you kind of heard a little bit about in the previous panel. That's where my focus is, but we have several sources of financing for, like I said, all property types.
Hi, I'm Ashley Loeb. I work for L&R Partners, which is a wholly owned subsidiary of Starwood Property Trust, which is the REIT of Starwood Capital Group, which has $44 billion in market cap. L&R, we're based in Miami, Florida, offices around the US and in Europe. Our main lines of business are loan origination, CMBS acquisitions, and distressed loan and property asset management. I work on the investment management side, so we are buying CMBS B pieces or CMBS bonds on the new issue side and the legacy bond trading side.
That's great. A lot of varied activities going on there. Maxie, can you start us off with sort of what brought you to commercial real estate finance?
Sure. I actually went to Georgetown, so happy to be back here, and I majored in government. So not finance oriented at all. I've always been a numbers person, and actually I interviewed at Walker & Dunlop when I was a senior here, and it was just an amazing place to work. I had never heard of basically I had no understanding of what underwriting Fannie and Freddie deals meant. And I got the job, and it was an amazing place to work. I worked there for almost 4 years. Probably would have stayed there forever if I hadn't had another opportunity just fall on my lap. And it goes along with what some of the leaders were saying, which is they're talking about how you specialize in some things, and how most everyone in real estate knows it covers all aspects, and my team does. We do office, we do retail, we do everything. But about 1.5 years ago, I was approached by CBRE because they have this huge debt and structured finance team that does equity and debt for all asset types, but they needed someone who really knew Fannie and Freddie. So the opportunity to go from being an underwriter over there to leading the whole multifamily team at CBRE was one that I obviously couldn't pass up. So it really just, I really took the job at Walker & Dunlop because it was a cool place to work, and now I'm like handling a team of 5, focusing on multifamily, and I love it. So.
That's great. Nicole, how about you?
Sure. So like everybody else, I fell into real estate not expecting it. I went to undergrad at AU and had a political science degree. At the time, we were right in the market downturn, and I was offered an internship at what was then Cassidy Turley, what became DTZ and is now Cushman. At the end of my internship, I was offered a job. I had no idea what I was doing. I didn't take any real estate classes in college, and I was on the job learning kind of internship. So it was a really great experience there. I spent a number of years with Cassidy Turley, and then got an opportunity at HFF to work for their team, which I think has been great. I went from a really large 150-person office to a really small, close-knit team. And like some of the leaders said, it's all about who you work with. And I surround myself with great people, or have the ability to be surrounded by great people every day. So it's been a really great experience.
Blair?
Again, just like everybody else, I kind of fell into it as well. Back in 2001, which I shouldn't date myself, but I graduated from college and moved with a bunch of friends out to San Francisco without a job, which makes no sense for a person who's now been evaluating risk for the past 10 plus years. But anyway, it was also, if anyone maybe around my age or older remembers, that was the .com bust, not the boom. So, but I spent, a few weeks trying to find a job, and then Cushman & Wakefield was hiring, and I was hired as an analyst in the appraisal department. And then I spent 10 years as an appraiser, getting licensed, working on my own, and really working on all types of properties, not just multifamily. And then kind of decided to broaden my horizons, and ran into a friend from college who works at Walker & Dunlop, and he said, hey, what if you check this out? So I've been there for about 2.5 years.
I graduated from Boston College in 2006, moved down to Miami, which I had never even been there before. Worked on, at that time in Miami, there were cranes everywhere. It was a huge boom. Worked on the construction and development side for a couple of years. Decided I wanted to use my finance degree a little bit more. Not that I really knew what that meant. And I found this job at L&R, where I still work. I went through the rotational analyst program. So it's like a 2-year program. You go through the different units of the business. After 2 years, I moved to London with the firm, was there for 3 years working to build a debt advisory team in London, as well as we started a rotational analyst program there. Been back in the States for about a year, and I work on the investment team. We're busy.
A lot going on. Questions at this point? All right, come up with some. So career development, you talked a little bit about career development, Ashley, and sort of the different paths. It seems like there are a lot of different paths in the industry, maybe some analyst programs that then lead you different places. Do you want to start us off on what some of those career paths are that you see, that you've seen yourself, others going on, what someone could expect with the industry? Sure.
Our firm offers a 2-year analyst rotation program. Being a graduate myself, highly recommend it. It's a great way to learn about the industry, and we hire people who have humanity degrees down to finance degree. Obviously, if you have some sort of analytical background, that's helpful. But you rotate through these different departments. There's loan origination, acquisitions, asset management, REO, which is like the real estate. And just so there's a few other groups that you could, we have a capital markets desk also. And so usually you spend about 2 years, and then from there our corporate culture is to retain the people we've just spent 2 years training. So it kind of provides like a transparent promotion opportunity for the analysts to stay within the organization. And, as you go through the different groups, you kind of see what you're interested in and who is interested in you. And typically it usually works out. But a lot of our graduates have also gone on to, move to New York and gone to big banks or hedge funds or private equity firms and done other things too, but I like to keep them.
And Blair, how about you all?
The way that a lot of people come into our company is kind of like how Maxie did in the analyst program in the underwriting department. So that gives you a lot of exposure to all the different, to the production side, the origination side. You really get to see a little bit of everything from the underwriting department. And there's pretty clear trajectory there on the credit side. And a lot of people stick with it. and just continue to stay on the credit side. Some people move over to production. There are a lot of opportunities to make relationships with people in a variety of different areas of the company, and you can learn a lot. So we also do have an internship program for undergraduate students during the summer in production side and in underwriting side.
There was a lot of talk in the first panel about it being a pretty people-intensive business and working with customers, capital sources, et cetera. It sounds like it's also pretty people-intensive within the firm, that you're working with others and interacting pretty closely.
Absolutely. And that's one thing, we were actually talking about this earlier. One of the reasons I was kind of ready to get out of the appraisal world is because it's such a singular, focus. You're just kind of working by yourself. You're not in the mix really. And what I really enjoy about working in finance and underwriting in particular is because you're talking to all of the different participants, and you're talking to a borrower 1 minute, you're talking to closing, you're dealing with everybody, and it's really, truly a team effort. And the experience I've gained in the past couple of years has been just immense.
That's great. Nicole?
Sure. So in terms of the trajectory side, one of the great things that I think we all get to do is we're seeing a lot of different sides of the business. So the experience that you get at a place like HFF, we're underwriting an office deal, and then later that day an apartment deal, sometimes a hotel deal. So you can really fall in love with an asset class and move to the principal side that focuses on that asset class. Or if you really want to move to a different side of the industry, like the lending side, you have that underwriting experience as well. And then from there, within the intermediaries, you can kind of branch up to a specialty in terms of a product type, like a hotel specialty. For me, a hotel is like underwriting a business. I think it's very different than any other part of the real estate world, so I don't often underwrite hotels. But you'll find what works for you as you kind of move along. So it's a great experience, I think, to sit in any of our shoes where we get to see all different asset classes. And yes, all people are important. Our clients are important, and then our lenders are also our clients, and our producers are also our clients. So sitting in our seat, you have to be able to engage well with everybody around you. So it's a really people-intensive business. And as you kind of grow up in this industry, the people that you're working with become your friends. So it's very relationship-driven, and I've had a great time doing it.
And Maxie, how about you and your view of sort of career advancement and opportunities to move in the industry?
I think actually real estate finance is interesting in some way because at least what most of us do, we work on teams and you're working on specific transactions. They're short-lived transactions and you move on to the next one. So it's easy to train someone because you just at some point in the last 2 years you probably did a deal that's somewhat similar. Unfortunately, no two deals are the same. If you think it's easy, it's probably going to be a disaster in about 2 weeks. But beside that wonderful point, it is a great way to train people because you hire an analyst and they start doing the analytical work for you. They're not on any of the emails. Once you start to trust them, you bring them in a little more, and then all of a sudden they're communicating directly with the client, and it's just a very natural progression. And on our team, when I came over, I was the first analyst with the 2 producers. We've since hired 7 analysts in the last 18 months. I'm being promoted to producer. We've promoted 3 analysts because we've had so much volume, and people have been given more responsibility, and it's just so, when you're able to run a whole deal on your own because you've worked on several of those in the last couple of months and years, you're able to, it's a career where you're truly able to show your capabilities, and you're forced to. So I think it actually allows for, there's a lot of people in commercial real estate that move up very quickly at a young age, and from, at least I haven't seen that in too many of my peers from Georgetown where they've somewhat skyrocketed. And also, obviously, a lot of that has to do with relationships. If you bring a huge client in, you'll probably get promoted. But you can also work hard to get there.
That's great. Questions for the group right now? All right, so getting a little bit more tactile. Are there particular projects that you've worked on in the last year that would give a sense of sort of here's the type of thing that I've worked on, either a particular financing or something that's memorable about something in the last year? It's like a particular loan or client. Anyone have something to throw out there they'd like to give an idea of?
So I'll talk about one we just closed, because I think they have to be closed, to talk about them. So we've done a lot of equity deals in DC as the city's development has really grown. In particular, we've really done a lot of multifamily. So with that being said, we recently, does anybody know the Patterson House right on DuPont Circle? It's that white building next to Books A Million. It's an old mansion. So we had a client purchase that building with the intent to turn it into 92 really small studio units that are highly amenitized. So they'd serve them breakfast in the morning and give them a drink every day when they got home, and have all of your living spaces in a big, fancy common area, and then you live in a fairly small, studio type unit. So they wanted to roll this out in every, major city across the country, and DC is their starting place. So we were hired, HFF, to raise the equity for this investor's rehab, redevelopment of the Patterson House. So we recently closed that deal. So we paired our client with the capital that was going to help them fund the project. And then later down the road, they'll get the debt, which will hopefully also come from us. So that's how we kind of put together the capital stack. So if you think of all of the money in a project in a stack, every piece comes from a different place, and we'll put all of those pieces into the stack. So that's kind of the part of commercial real estate that gets really creative. There's a lot of ways to structure a deal, and there's a lot of negotiations that happen on the equity side that make it so much fun. So nothing is ever the same. Everybody has a different priority. So it's been really great to have an opportunity to help structure some of those deals in DC. Of course.
Yeah.
So that's fascinating.
Yeah, so it was originally built for the wife of the Chicago Tribune owner, and I'm originally from Chicago, so I thought that was very cool. And then, yeah, and then it was purchased by, I think, the National Women's Board that would use it as an event hosting space. Yeah.
What I wanted to know actually was, so you did the financing for that, you just closed it?
The equity.
Yeah. Okay.
The equity placement,
So
yeah.
now, what's the next? Are they going to do a renovation of the building inside?
Yes, so the
Are
whole...
you involved in that?
So we're not involved in the renovation itself, so we don't have any involvement in actually the development of it at all. But we have, the detailed plans that we'll take to the list of potential equity providers to help convince them that this is a fantastic project. So for anybody that's interested, the plan is to rehab the existing mansion, and then there was an addition built onto it in the 60s or 70s it's not part of the historical part of the building at all. So that's being ripped down, built up again, and then they'll attach that to the historic mansion, which is just so cool on the inside, and they're preserving all of the character. So they're keeping the ballrooms, they're keeping stuff like that. That was probably too much detail, but yeah, it's pretty cool.
But I think there's a good illustration of how, these deals are not just and
Right.
they really can take a lot of, sometimes brain damage, but they take a lot of creative energy and really thinking hard about how you put things together.
Right, and the Patterson House in particular happened to be an existing building. It was a vision that people could see. Some other projects that we work on are really selling the dream. We capitalize Atlantic Plumbing, the new building owned by JBG in Shaw, or by Howard, whether or not you count that as Shaw. But that was about selling the dream. I mean, that area didn't exist a couple years ago, so it was really about convincing equity partners that this would be a good play, and I think everybody's watching how successful that's been. I live over there now, so it's been great.
And every deal is different. So that's an example of one
every deal
particular
is
deal, and every one you dive down into the details of, and figure out what's going to be different about this one?
I think my worst day at work was the day I realized no deal would ever be the same. It was so disappointing.
Anyone else want to dive in, or you want to jump on?
We closed an interesting deal this year that you may not realize how complicated something like this is, but if you've been to Bethesda, there's some condos called the Lohrfink that are behind the Equinox. Those are large format condos. They are like 3,000 square foot condos, which is enormous. They sell out for between like $3 and $20 million. When you're trying to build or finance something like that, first of all, condos are tough. The lenders in this area don't love them. But second, when you have a condo unit that is that large and the price is that large, there's no, if those condos don't sell, there's no fallback. You can't just rent. If you do an 800 square foot condo, you can just start renting them out and wait for the condo market to pick back up. But you can't rent out a 3,000 square foot condo for a price that even remotely makes sense and will remotely allow you to pay back the loan that you've been given. So for a project like this, this project was hundreds of millions of dollars. We did the debt and the equity. Finding the equity for it was very tough. It's just very risky. We are selling the dream of all these empty nesters that live in Chevy Chase. Probably a lot of your parents are getting rid of their houses and want to move into these condos. But that's very hard to convince someone who is actually taking the risk on it. So we ended up finding like a family office who put the equity into the deal. And our structure was pretty unbelievable, and it was pretty unbelievable that we got it done. And we also did another large format project in Potomac, Quarry Springs, that some of you might know. Those are also huge units where every unit has its own elevator entrance. And so that was a unique situation because it's unprecedented in the area, and it's just such an enormous amount of risk. But if it works out, it's going to be phenomenal, and it is working out. They've sold them all on pace. They haven't lowered any of the prices, but it's just very tough to find a lender to bite on something like that. So it was a pretty difficult and a lot of brain damage.
The recurring theme there. Any questions? Yes.
My name is Dave Gillette. I'm a first year MA student at George Town. Thank you to everyone for coming here tonight. What are some of the skills outside of maybe the personal skills that you would recommend, someone like myself pick up in the next year and a half or 2 years after the school that could translate into getting a job in real estate?
Okay. Ashley, you want to start us off?
Sure.
Put you on the spot.
Well, I think that all of these jobs, you can, as long as you have like hard work, a good attitude, and are willing to learn as much as possible, I think you can tackle it. But analytical skills definitely help. So any finance courses, I'm sure Georgetown MBA offers like real estate courses. Again, I think a lot of it's on the job, and just having the right attitude and willing to read as much as possible, learn as much as possible, speak to as many people and network, and just put yourself out there.
Blair?
I would definitely agree. I think organizational skills is a big one. Analytical background. I think, an interest in real estate is important. I think, some people think, oh, this sounds like a job I would want, but they don't really care about real estate. You don't have to be passionate about it or anything, but an interest is good. But yeah, I think there's a lot of most skills are on the job. So just a willingness to learn and get out there and get in front of people and read, and you'll figure it out along the way.
Great. Maxie?
Excel. Be really good at Excel.
Nicole?
So I agree with that. Take your mouse away and then use Excel.
Yeah,
It was
if you can
made
just
without
whiz
a
with the
mouse.
keyboard, never touch your mouse, then you'll probably get hired in a heartbeat.
Yep.
Yes.
Hi there, Charles Geller, first year MBA student as well, and thank you very much for being here. I'm just wondering how much of this is about the deal and how much of it is about the client? person doing the transaction how?
Anyone want to tackle that one? Sort of when you're looking at a deal, the different pieces that are driving it.
I think from someone from the credit side, we don't always want to take risks on everything, but if you have a great client that there's a lot of future business or you've done past business with them, I think that if there's a slightly riskier deal, but it's a great client, you're willing to look at that. But if you have a client that you don't have a relationship with and you've got a risky deal coming up, that doesn't quite make as much sense. So that's not really an answer to your question, but I think it's just a little of both. And sometimes it's going to be more client-based, and sometimes it's going to be more deal-based. So that's not exactly what you asked.
Well, I would just add to that and say that I would say it's about 50-50, but typically a deal with a good client, a good sponsor you'll be able to get it done, and it's a lot easier than, the real estate doesn't matter quite as much, but it's mostly because the lenders, if that's a really good client, it's because the lenders know that that client is only doing really good deals. So they kind of go hand in hand.
Great. Questions up here? Yes, sir.
Yeah. What has been your biggest failure, and what have you learned from that?
That's the perfect interview question, isn't it, right? And somehow your failure has really turned out to be a butterfly in disguise. Anyone want to take that one on?
Reply all. Just make a lot of mistakes.
Yes.
It's just, I don't hit that button anymore.
Yeah.
I mean, it's interesting. One could look at that question in terms of projects, and maybe a project that the expectation was that the market would go like this or go a different way. I think the reply all is a really neat perspective, that probably some of the bigger challenges are on that, just managing the day-to-day and sort of being late for a meeting you shouldn't have been late for because the traffic was...
I was trying to email respond while I was on vacation and responded to the entire company. So...
That's great. Any other questions? Yes, sir.
Thank you for coming on. Joey's last first year as well. On the other end,
in terms of a deal?
Everyone will have an answer for success, right? And on the deal side, as opposed to sort of when you think about a successful deal, what is it that drives it?
Happy client.
Yeah. And where everybody thinks they've won. Not only just the client, but you feel good about, lending to this client. And in my case, like Fannie Mae and Freddie Mac are happy to be in this deal too. So, yeah, I think that's success. When everybody walks away at closing and says, yeah, that was good. Not.
Back in the back there, yes, sir.
Hi, my name is Adrian. I'm a first year MBA at American University. I was just curious to know a little more about your day-to-day operations and also your work-life balance and how it is.
Does someone want to do sort of a typical day, what it might look like?
Considering it changes.
Yeah, is there a typical day?
Not really.
For me, sorry to
No,
jump
that's
right in,
great.
but I would say a typical week might be, seeing a deal through for 3 weeks, let's say. I mean, that's my rule of thumb in my head. It's never consistent, but 1 week you might travel, because we travel all across the country. So 1 week I might be traveling for a day or two to go see the property and the comps and everything. And all the while I'm still collecting due diligence from the borrower, communicating with them, communicating with our appraisers and engineers to make sure that those third-party reports are coming in. And then along those, the next few days, reviewing those reports, making sure all the information that I've gathered kind of complements each other, and that we're figuring out what risks there might be and how we can mitigate those risks. And then ultimately, I make a presentation to our credit committee, and I say, here's the loan amount that we would like to, we recommend, and here are the risks, here's why we feel okay about them, and then we kind of move it along. So that's sort of the quick version of how a typical deal would go for me, which is a few weeks.
Any other things to add to that? And some late nights, some less late nights?
Yeah, you have to expect that.
Yeah.
Deal volume changes throughout the year, so.
Yeah, and because also what we do is based on the market, which also is something that really appealed to me, that we're not just in our own little world. You actually need to be aware of what's going on and where the Treasury is moving and how that impacts your deal, because if the Treasury has shot up 20 basis points, all of a sudden you're not giving them a $50 million loan, you're giving them a $45 million loan or whatever the number is. So you need to be aware of that, because so that goes in hand with what I'm doing on a daily basis, is just managing people, managing the deal on the phone a lot, like just hundreds of emails, because you're collecting, because we're acting as a lender and as a broker, so you're collecting due diligence, you're asking questions, you're negotiating, and you're problem solving, which is something that was discussed earlier. But you need to be aware, you need to be on top of your deal in every aspect of it of all time. So all day, that's really all you're worrying about, is making sure nothing slips through the cracks.
That's great. Yes.
Well, hi, my name is Alex. I'm a first-year MBA at Georgetown. Thanks for everyone for coming. My question kind of piggybacks off Max's point about the rate environment. Just wanted to know, the last 6 months or so, what kind of changes have you seen in activity, and how do each of your firms think about that going forward? 12 months.
Well, August was fun. So summer is a little bit different for the commercial real estate world. I think for the past, several years since I've been in the industry, something happens every August, and then within the next 2 months, it kind of settles back out again, which I think has happened, whether or not you'll agree. But it changes day to day, and it also changes deal to deal. Like, life companies will quote deals very differently than a CMBS shop will. So it's really changes based on what lender you're talking to at the time. So that also has an impact. So we're tied to a lot of different things.
Great. Any last questions? Probably our last one here.
So after you guys close a deal, what's your communication process on both the borrower and lender side? Does communication kind of fizzle out now that the deal's in close? Or do you guys constantly follow up to make sure everything's going smoothly?
Through what's going smoothly?
Because you guys are like the lender, you're the intermediary, so are you like facilitating the communication between the borrower and lender, like for the loan repayment further on?
Well, it depends. So in the situation where when we act on behalf of Fannie and Freddie, we continue to service the loans, so they come to us with any questions they have. A representative of our company goes and does the site inspections. They collect the property financials, so we continue to be a point person. But after any deal you close, there's deals that you close that are bridge loans that are, they were hoping to pay off in 2 years. There's some that are longer term. Something that every originator works on is staying on top of those clients to make sure that because you just had a successful closing, you want to close more with them. So you follow up with them not only on that deal and how it's going, like, can I make sure you refinance it with me, but also, do you have anything else similar going on that we can do the same thing on?
Yeah. Anything else to add there? Okay.
I agree with that. HFF does service for a lot of big lenders. I don't personally do it myself. I don't know if you're personally taking the calls, but HFF as a company has a servicing arm. Yeah.
And within the industry, there's certainly huge
yeah.
servicing operations out there, and different firms doing different things. So
Yeah,
lots
a lot of times I
going on in that
just
space.
forward the email, but I act like I'm helping.
So actually, I'll talk about it. So what HFF and CBRE do is CBRE has a special servicer, right? Do they?
No, not
Well-
special servicer, but.
So monitoring the performing loans is what you guys would do.
Right,
But my firm, we would service all of the defaulted loans. So anything like when 2009 happened, 2008, we were really busy. So we're working out everything that defaulted, basically. And then, once we take title to a property, it becomes REO. So L&R is the largest special servicer in the States. That's just one arm of our business, though.
Great. So with that, let me join me in thanking Ms.